Have you ever stared at a cryptocurrency chart, heart-pounding, convinced you know exactly when to jump in or out? You see the perfect entry point, the ideal exit strategy, but then you hesitate. You wonder, how can I execute this trade right now? How do I make sure I get the price I'm seeing on my screen, without delay? If that sounds familiar, you're not alone. Many new and even experienced crypto traders grapple with the sheer speed and volatility of the market. And in such a fast-paced environment, having the right tools to execute your vision swiftly and efficiently is paramount. Today, we're diving deep into one of the most fundamental yet powerful tools available on the Gemini exchange, the market order. We're talking about instant execution, seizing those fleeting opportunities, and ensuring your trade goes through when you need it to. But it's not just about speed, it's about understanding the nuances, the advantages, and yes, the potential pitfalls that come with prioritizing immediate action over precise price control. Think about it. The crypto market never sleeps. It's a 24/7 global phenomenon, a whirlwind of buying and selling that can shift in the blink of an eye. You might be watching Bitcoin suddenly surge, or Ethereum experiencing a rapid dip, and in those moments, every second counts. A market order is your direct line to that action. It's the equivalent of saying to the exchange, I want to buy or sell this cryptocurrency now, at the best available price, whatever that may be. It's a powerful statement, and understanding how and when to use it can significantly impact your trading outcomes. But before we jump into the step-by-step process on Gemini, let's establish a solid foundation. What exactly is a market order in the grand scheme of cryptocurrency trading? Imagine an order book, a digital ledger where all buy and sell orders for a particular asset are listed. You have people wanting to buy at certain prices, the bids, and people wanting to sell at certain prices, the asks. A market order doesn't wait for a specific price to be met. Instead, it immediately sweeps through that order book, filling your order by matching with the best available opposing orders, whether those are buy orders if you're selling, or sell orders if you're buying. This immediate matching ensures your trade executes almost instantaneously. Now, you might be thinking, that sounds great. Why wouldn't I always use a market order? And that's a fair question. The primary advantage, as we've discussed, is speed and guaranteed execution. If you absolutely must enter or exit a position right now, a market order is your go-to. This is especially true in highly liquid markets, where there's a constant stream of buyers and sellers, ensuring your order can be filled without significant price deviation. However, this immediacy comes with a trade-off, price control. Because a market order prioritizes execution over a specific price, you might not get the exact price you saw on your screen a moment ago. This phenomenon is known as slippage. Slippage occurs when the market moves rapidly, or when there isn't enough liquidity at a particular price point to fill your entire order. In such cases, your market order might execute at a slightly worse price than anticipated, as it moves down or up the order book to find enough liquidity to complete the trade. While often minimal in highly liquid assets like Bitcoin or Ethereum on a platform like Gemini, slippage can be more pronounced in less liquid altcoins or during periods of extreme market volatility. Consider a scenario: you see Bitcoin at $70,000 and quickly place a market buy order. If there isn't enough sell volume at exactly $70,000 to fill your entire order, the exchange will automatically fill the remaining portion of your order at $70,000.01, then $70,000.02, and so on, until your entire order is complete. The average price you end up paying might be slightly higher than the initial $70,000 you saw. Conversely, if you're placing a market sell order, you might receive a slightly lower average price. This is a crucial concept to grasp when using market orders, as it directly impacts your overall cost basis or profit. So, when is a market order the right choice? It's ideal for situations where you prioritize speed, you need to get into or out of a trade immediately, perhaps to capitalize on a sudden price movement or to mitigate potential losses during a sharp downturn. You're trading highly liquid assets. Assets with high trading volume and deep order books tend to experience less slippage with market orders. You're making smaller trades. Smaller market orders are less likely to significantly impact the order book and cause substantial slippage. You're not overly concerned with tiny price discrepancies. For long-term investors or those making relatively small trades, minor slippage might be an acceptable trade-off for instant execution. Now, let's talk about Gemini. Gemini is a well-regarded cryptocurrency exchange known for its robust security, regulatory compliance, and user-friendly interface. It offers a straightforward approach to buying and selling digital assets, and placing a market order is no exception. Gemini provides both a basic interface and an active trader interface, which offers more advanced charting and order types. For the purpose of a simple market order, both are quite intuitive, but we'll focus on the standard, accessible method first, and then briefly touch upon active trader for those looking for more control. To begin, you'll need to have a verified Gemini account and have funds deposited into it. Whether it's fiat currency like USD or Euro, or another cryptocurrency you wish to trade, ensure your wallet is sufficiently funded for the trade you intend to make. Placing a market buy order on Gemini, standard interface. Log into your Gemini account, navigate to the Gemini website or open the Gemini mobile app and log in securely. Navigate to the Buy Sell section. On the main dashboard, you'll typically see a prominent Buy Sell button or a similar option. Click on this to proceed. Select the asset you want to buy. A drop-down menu or a list of available cryptocurrencies will appear. Choose the cryptocurrency you wish to purchase, e.g., Bitcoin, Ethereum, Solana. Choose Buy. Ensure the Buy tab is selected. Select Market Order. This is crucial. Gemini offers various order types. You'll need to explicitly select Market from the order type options. This tells Gemini to execute your trade at the current market price. Enter the amount you want to spend. Here, you'll specify how much fiat currency, e.g., USD, or cryptocurrency you want to use to buy the selected asset. For example, if you want to buy Bitcoin with $100, you'd enter 100 in the USD field. Gemini will automatically calculate the approximate amount of Bitcoin you will receive based on the current market price. Review your order. Before confirming, Gemini will provide a summary of your market order. This includes the asset you're buying, the amount you're spending, and the estimated amount of crypto you'll receive. Remember, the estimated amount is subject to minor fluctuations due to slippage, especially in volatile markets. Confirm the order. If everything looks correct, click the Buy or Place Order button to execute your market order. Congratulations! Your order should be filled almost instantly. With that said, thanks for watching and until next time.